Welcome to today's market update. I'm Maya Keynes, and joining me is financial expert Eli Sterling. Good morning, Eli.
Good morning, Maya. Great to be here.
Let's dive right in. We've got several major headlines shaping markets globally today. First up, breaking news out of the Middle East. Israeli Prime Minister Benjamin Netanyahu has reportedly agreed to former President Trump's 20-point peace plan aimed at ending the Gaza war. According to reports, Hamas must release all remaining hostages within 72 hours and surrender governance of Gaza. How might this geopolitical shift affect global markets?
This is huge, Maya. Any sign of de-escalation in such a volatile region tends to boost investor confidence, especially in risk assets like equities and commodities. If implemented, we could see relief-driven rallies in oil prices and emerging market currencies tied to regional stability. But keep an eye on diplomatic developments. Any setbacks could reverse these gains quickly.
Also making waves, concerns over a potential U.S. government shutdown. A recent report suggests the dollar may suffer in the short term due to existing downward bias and reduced long-term exposure. Meanwhile, equities could benefit slightly from a brief shutdown, while bonds face mild headwinds. What should traders be watching here?
Absolutely. Historically, short shutdowns tend to create volatility without changing broader trends. Traders should monitor ADP employment data closely, which may cause exaggerated reactions given the absence of jobless claims and non-farm payrolls this week. The dollar index will likely remain sensitive until fiscal clarity returns.
Another intriguing angle involves U.S.-China relations. There are unconfirmed reports that Chinese President Xi Jinping may push for a trade deal involving Taiwan policy adjustments in exchange for favorable treatment on TikTok and tariffs. Could this reshape tech sector dynamics?
If true, this would mark a pivotal moment in global diplomacy. Any softening of U.S. stance on Taiwan could rattle allies in Asia and send defense stocks soaring. Simultaneously, tech firms under scrutiny, particularly those linked to TikTok or semiconductors, might see renewed regulatory pressure or relief depending on negotiation outcomes.
Turning to commodities, Ian Harris, CEO of a mining firm, claims gold could surge to $10,000 and copper to $10 amid a new supercycle frenzy. He cited the GDX Gold Mining Index jumping 90% year-to-date. Does this sound realistic or speculative hype?
While 10K gold sounds extreme, there's merit to his argument. Deglobalization fears, inflationary pressures, and capital rotation into hard assets are real forces. The 90% rally in GDX supports institutional demand. Still, let's not ignore fundamentals. If central banks pivot dovishly, precious metals could cool rapidly.
Now, shifting gears to crypto, where Sui Tether is showing mixed signals. Using the Stochastic Relative Strength Index strategy on a daily interval, current price sits at 0.000217. Eli, can you walk us through what the indicators tell us?
Sure thing. Stock RSI shows K at 37.78 and D at 35.87. Both rising from oversold territory, but still below neutral. That suggests recovery momentum, though not yet overbought. Meanwhile, moving average convergence-divergence remains negative, indicating lingering bearish pressure. Volume is weak, too, so don't expect explosive moves anytime soon.
And what about using Fibonacci retracement levels for Sui Tether? Where do things stand technically?
Prices stuck between the 0%, $3.07, and 23.6%, $3.28 retracement zones. Without a breakout above 23.6%, it's tough to call a trend reversal. The moving average convergence-divergence histogram is contracting, hinting at fading momentum, but on-balance volume continues to decline, signaling distribution. Patience is key here.
Let's switch focus to Bitcoin. With the buy-hold-sell strategy applied to Bitcoin Tether, current price is 0.000258. What does the model suggest?
Gray signals dominate, indicating a special condition where V1 equals M1 equals V1 equals V2. This implies market indecision. However, V1 and V2 are converging, which may signal weakening bearishness. Combine that with a bullish moving average convergence-divergence crossover yesterday, and you get cautious optimism. Watch for a close above 114,343. That's key resistance.
Finally, looking at Avalanche Tether via the zero-lag trend strategy, priced at 0.000116. Is there actionable insight here?
It's complicated. The ZLEMA shows a bullish trend flag, but price pulled back below it. Average directional index reveals weakening momentum, and volume tells a similar story. Until Avalanche breaks above $30.45, the 61.8% fib level, treat this as consolidation. Risk management is paramount.
Thanks, Eli. For our audience, here are today's key takeaways. Monitor Middle East developments. Track U.S. fiscal updates for dollar sensitivity. Watch for China-U.S. trade negotiations impacting tech names. And stay alert to commodity rotations driven by deglobalization fears. In crypto, patience pays off. Wait for clearer setups before taking aggressive positions. Join us again tomorrow for another deep dive into market movements.